Good morning and welcome everyone to the Moneycontrol live stream. You're watching the opening bell. I'm your host, Nickey Mirchandani. Well, Indian equity markets are set for a slower start this fresh week as might just surrender some of the previous week's gains. Markets are expected to be selective from here on. Nifty has hit a new high. Bank Nifty is 6% away from the highs. And if you look at the setup that we have this morning, GIFT Nifty indicates somewhat lackluster start coming in for Indian equities, down by 0.2%. US markets, they've ended higher on Friday, and the S&P 500 has registered an all-time closing high. Strong earnings and a blowout January employment data essentially has boosted in the confidence. However, Asian shares, they have slipped in early deals on Monday after a solid US job report dashed hopes of rate cut from Fed. Talk about the FII and the DII data. Well, FIIs have bought in shares to an extent of 70 odd crores. That's a minuscule amount, but nevertheless, the trend has reversed. And DIIs, they've purchased an equities to an extent of 2,463 odd crore. And in terms of earnings that we like to watch out for, Bharti Airtel will be reporting in the numbers. And also, we will see something in the likes of Ashok Leyland and Bajaj Consumer Care along with Bajaj Electricals. And also Idea Forge Technology, the IPO, new kid on the block which is just listed in, also will be reporting in their numbers today. Tata Chemicals along with Varun Beverages too will be in focus ahead of declaring their quarterly earnings on Feb 5th. But that's all that we have in terms of cues that you need to watch out for. But of course, two stocks that deserve a mention before we toss our conversation across to Prashant Sawant from Catalyst Wealth is State Bank of India along with that Tata Motors. Well, State Bank of India, a bit of disappointment. Talk about the net profit is down by 35%. The net profitability has missed in the estimates because of the exceptional item, and NIIs have also missed in the estimates along with the NIMs. That's a bit of SBI and Tata Motors. Of course, there's a slew of brokerages which have upgraded the counter. Revenue is up by 25% for Tata Motors and EBITDA has also shot up by 59%. Margins have expanded to 14% versus 11%. But that's the long and short when it comes to the blue chip counters. Let's get across to our technical guest on the show, Prashant Sawant from Catalyst Wealth, who's here to talk about the trade setup and the levels that now we could be working with and the strategies that the viewers need to keep in mind before lapping up the trades. Morning there.
Morning, Nickey, and good morning to all the viewers. So, I think let's start with Nifty. And if you look at Nifty, we happened to make a new high on Friday and there was pinpoint selling. Now, my observation over the past few years is that whenever there is a pinpoint selling from any level, that level normally is taken off in the next 5 to 7 days. So, I am expecting a new high in this week. First thing. On the downside, if you look at the spot currently, we are quoting around 21,920. So, 21,800 happens to be a major level for the week ahead. And on the upside, I think the same number, 22,100 odd, happens to be a major resistance. So we are right in between that zone. And I think the week ahead would be purely dependent on the breakout of this zone on either side. So you need to be cautious. And at the same time, stock-specific approach would be a good approach. The same way that I recommended last week. Banks as compared to index look very weak. And I think I would be a little more cautious here. Avoid any positions. And Bank Nifty, if you look at the current price, it's quoting around 45.
Bank Nifty, we're going to be chatting about it in just a bit. We've got your understanding on the positioning around the Nifty levels. I'm just going to interrupt you for just a minute, address the market open and come back to you. Nifty 50, we're looking at a flat start coming in for the markets. It's not as bad as we anticipated. We're looking at losses of around 0.2%. But there is some amount of, rather just say, conviction still in the markets, even after the interim budget. The next big trigger for the market will be the RBI monetary policy on Feb 8th. Whether there's going to be a change in terms of the action, that's unlikely, but the tone definitely would be watched out for. 21,850 mark, well above that level. Bank Nifty at this time is down with losses to an extent of 0.5% thereabouts. Mid cap and the small cap index, let's pull that up just to see if there's a level of outperformance coming in from that one. Yes, we're looking at gains for mid cap, 0.1%, and small cap acting no difference. Perhaps a bit of outperformance there, rather, let's just put it that way. 0.4% of gains coming in for that one. What I would also like to watch out for before we address in the top gainers and the top losers is State Bank of India and Tata Motors. These are two stocks which are going to be extremely interesting in trade today. And let's pull that up just to see if State Bank of India has missed in the estimates on the profitability front, on the NII front. And there we are. It's looking with losses. Right now, it's opened with losses to an extent of 1.5%. Whether the selling pressure will accentuate or not, we will figure that out from Prashant. But let's also talk about the Tata Motors, just to see how is that stacking up. Well, look at that. It's clearly the day belongs to Tata Motors. Bunch of upgrades which have come through for Tata Motors. No surprise for guessing there. But 5.5% uptick coming in for Tata Motors is a big deal. I don't even remember the last time I saw those 6% gains coming in for Tata Motors. Top gainers and the top losers that we have on the screen right now, if you can pull that up, just to see where the momentum has been building up. No surprise for guessing that Tata Motors is the stock of the day. Sun Pharma, Eicher Motors. So clearly it's the bunch of auto names which apparently are doing well. Tata Steel, ITC and Cipla. Well, these are also some of the other top gainers that we have. Apart from that, NTPC, JSW Steel, M&M. So we are seeing a bunch of auto names along with the metal names which have been doing well in trade today. Top losers, let's pull that up. Well, UPL, State Bank of India, ICICI Bank. Well, we were bang on in guessing the top gainer and the top losers. We addressed State Bank of India and Tata Motors right at the open, and there it is. UPL, SBI, ICICI Bank. So financials right now is a bit of drag. Kotak Mahindra Bank, Reliance and HDFC banks. So a bit of drag coming in from Reliance along with the financials, along with a bit of IT names put together. That's what the market trend is looking like. But let's go across to Prashant right now. Prashant, Bank Nifty strategy, because that's the one which is clearly dragging in the markets lower. Reliance is also trading in a bit lower. These two, and then we'll come back to you with more.
So, Nickey, if you look at Bank Nifty spot now, we are quoting somewhere around 45,700 and 45,500, 45,400. That happens to be a very strong support zone. Now, those who want to jump in with a predefined risk can go along with a stop loss at 45,300. But those who want to enter with conviction, I think you need to wait for crossing a crucial level of 45,900. So, if I were in your place, I would wait for a conviction-based trade above 45,900. I would go long with stop loss at 45,600, just less than 1% risk. And then I would look for targets around 46,500, 46,800. So I think the best way would be wait for spot to cross 45,900 and then go long. And if you look at the individual components, I think all the private banks are looking slightly weak. Our weak would be the wrong one, but slightly they haven't opened on a strong note. SBI is also lacking. The only bank which is showing a little bit of strength is Canara Bank, right from the past whole week. So I think I would, as I said, I would wait for a spot to cross 45,900, then go long on Bank Nifty for targets around 46,500. So whenever it happens in the week ahead, I think that would be the trade for Bank Nifty.
Clearly, what is done well, Prashant, that I think both of us would want to chat about. I'm sure one recommendation that you've given is Canara Bank. Okay, also talk about the levels coming in for Canara Bank, because you suggested that there is some amount of traction, fair bit of traction building up for this one. So talk about that. Go ahead.
Yeah. So I think Canara Bank is already doing well. Those who have long positions can trail with 505. Even those who want to buy, just buy it as near to 510, 510 and hold with stop losses with a spot closing below 500. I think the stock has potential to show levels around 535, 540 as well.
Also, I'd want to chat about Tata Motors, because I don't quite remember the time when the last time we saw that 6% gains coming in for Tata Motors. That's a big up move. If someone was supposed to go open fresh positions at this point of time within this counter, what would your advice be?
So, Nickey, I think I would not jump in on this gap up. Those who have positions, definitely you are enjoying good profits. So you need to trail. Your trailing stop losses have to be, if you are an investor, keep it deep around 890 levels, 895. And if you're a short-term trader, keep it around 920 odd levels. But to enter a fresh position, I would wait for the gap to be closed. And my level of buying, my interest of buying would be around levels close to 910, 915. So if we get the stock in this zone week ahead or any point of time ahead, I think that would be a level to go long. Stop losses would be around 890, 895 zone. Then you can look at levels around 975, 980 as well.
Okay. We've chatted about SBI, we've chatted about Tata Motors. That's clearly two of the stocks that need to be highlighted and addressed. But what I'd also want to talk about is Paytm. That's seen some massive amount of sell-offs there, and clearly 40% lost in the last two odd sessions. And let's also look at pull up the chart for Paytm, because that's the one that we need to watch out for also. Serious amount of losses which has come through for Paytm. And look at that, today's session is not different. In fact, the circuit limit has been revised lower from 20% to 10%, and there it is. More losses coming in for Paytm. Prashant, what do you make out of it?
So, Nickey, I'll take a minute to talk on this. I think a simple rule I follow is that any stock that is trading below its IPO price, I do not go long on it, because a very basic thing. If you're not able to cross the IPO price, I think there is something wrong. The way LIC has crossed now, I think it is showing conviction. But if you look at Paytm, it never even went near to the IPO price. In fact, as a disclaimer, I would say that I was allocated the shares on IPO application. If I remember, it was somewhere around 2100 odd. And day one itself, it was 1900, where I exited in a small loss. And I think that's what is a lesson, that it's always better to book a small loss and do not buy stocks which are weak. Try to buy stocks which are strong. So if you look at moves on Tata Motors, it has been consistently making new highs. And what people want to see is they want to buy 52-week lows. Now, this is what happens when you buy a low stock. Currently, last 4 days, nobody is even able to exit their position, whether it's individual or HNI or any other big entity. A lot of people are holdings in this stock. And I think more is this week. If this stock doesn't come out of the lower circuit, I think it can be really bad for the stock.
That's clearly some amount of serious losses that Paytm is looking at. And of course, you've burned your fingers hands first hand there. So clearly, it is not a stock typically that you would also want to keep on your watch list for sure. But let's talk about Delhivery. You know, that's some amount of profit has finally been reported by the company. There's some sense of euphoria amongst the new age company stocks that perhaps they're coming in a big way. What do you make out of Delhivery?
So, Nickey, the same logic which I quoted now about the IPO price. The opening day price of IPO for this was 495. We are currently trading around 480. Now, if I want to go long on this, my simple logic would be, I want the stock to close at least 4-5% above the opening price of IPO. So I would wait for a close above 500, 510, then go long. If that does not happen, I will totally avoid the stock. This simple rule of trading and investing can save lakhs of rupees, as we saw in case of Paytm. So wait for the stock to close above the IPO price, at least by 4-5%, then go long on it, because the price itself is telling you that the pricing was fair and now we are ready to scale new highs.
Okay. Any immediate levels for Delhivery, Prashant?
The same ones which I quoted. I think a close above 500, 505 zone would be a good conviction-based trade to go long.
Okay. Amit, your top two recommendations for the day also. Do you expect banking stocks to perhaps be a little more in focus today? We've seen some sharp losses coming in from State Bank of India. HDFC Bank too has been a drag. And RIL, again an index heavyweight, has been weighing down on the markets. Your view on HDFC Bank and RIL at this time?
So I think with regards to HDFC Bank, we are in the process of bottom formation, but the bottom is not formed yet. So I would not preempt. I will definitely wait for it. And I think those who are holding long positions, your stop losses have to be just below 1400 levels. So say 1390, 1395 spot closing basis. Any close below that can be very, very weak for the stock. So keep that as a stop loss. Fresh positions, I would wait for close above somewhere around 1500, and then I would go long.
Okay, Prashant, stay on with us. We are just going to come back to you in just a jiffy. State Bank of India, let's address in the stocks and news right there. I mean, we've already mentioned about State Bank of India and Tata Motors, but let's revisit the numbers and what typically the brokerages have to say about these counters. Prashant, stay on with us. We're going to come back to you in just a jiffy. State Bank of India has reported in the net profitability, which is down by 35%. Net profit has missed an average of 5 brokerage estimates as per the MC Moneycontrol analysis. Bank report has it's reported at a one-time exceptional item of around 7,100 crore. NIIs, they've stood at 39,815 odd crore. missing in the estimate of 40,300 crore odd number. The NIMs have stood in at 3.22%. What JP Morgan has to say about State Bank of India, it speaks about the Q3 headline, PAT, impacted by a one-time impact on the pension liabilities and wage revision. It also talks about the core NIMs being down by 12 basis points sequentially, driven by a deposit repricing, but also reported in down 7 basis points YOY, offset by refunds. It's also spoken about the asset quality that has remained in strong, and that is something that you can probably draw some solace out of. But 4Q is expected to see another wage revision hike. So that also could weigh down on the financials. It's not just the numbers, but also the outlook, which is weighing down on SBI's performance right now. However, JP Morgan says that FY25 should benefit from moderation in wage cost, driving up the operating leverage of State Bank of India. So that's a bit of word coming in. The next quarter looks to be a little bit iffy for State Bank of India, and the numbers have also been a bit of a drag and missed their estimates. But Tata Motors, multiple upgrades coming in there. Let's address in the basic numbers first. The revenue is up by 25%. And EBITDA is up by 59%. The numbers have come in at 15,333 odd crore as compared to the estimates of 14,778 odd crore. Net profitability has shot up more than 138 times. 7,025 compares to that of 3,043 crore. The numbers, their consensus estimates was to an extent of 2,500 crore. So we were actually looking at a dip. Multiple upgrades by Tata Motors. Morgan Stanley has raised the target price. Jefferies has raised in the target price. HSBC has raised in the target price. Goldman Sachs also no different. The reason for multiple upgrades for Tata Motors is the second quarter of JLR raising EBIT guidance. That's the key takeaway for Tata Motors. Jefferies is expecting in better 4Q led by seasonality and improving supplies at JLR. But Prashant, quickly, what do you make out of Delhivery? Apart from that, any new age typical stock that is done well at this time?
So I think one stock which I was quoting based on the same logic which we just spoke about was PB Fintech, and it's currently trading around 980, 982. So I think this is a place where one can take a risk and go long with stop losses around 940 spot closing basis, and look out for targets around 1050, 1060. I think it has given a good run up in the past 4-5 days, sustaining about that crucial zone. So this is an area where you can go long for sure.
All right, Prashant, we're just going to leave it at that. And thank you so much for taking out the time and having this conversation with us. All right, now let's quickly navigate our conversation to Mayuresh Joshi, who heads the equity research at William O'Neill India. Morning there, Mayuresh. How are you doing?
Morning, Nickey. Always a pleasure to be on your show.
Well, pleasure is all ours. We had two interesting set of numbers today. One is, I'm sure you must have already seen the reaction though, State Bank of India, which was a complete miss on estimate, and Tata Motors, which has seen that slew of rating upgrades, or let's just say the target upgrades from a bunch of brokerages after the JLR has reported in, or let's just say up the guidance again for EBIT. How do you look at Tata Motors vis-a-vis other auto stocks, and what's going to be your strategy within the auto names at this time?
So, Nickey, I think Tata Motors is totally different gear, right? I think they're operating in the 7th or the 8th gear, very frankly. And I think the numbers are probably justifying the kind of reaction that the prices are exhibiting at this juncture. Very strong set of numbers. Again, I think the guidance revisions that have happened on the JLR EBIT front, which is the biggest contributor as far as the consolidated EBIT numbers are concerned, is a huge positive. We will expect a lot more launches happening in terms of the EV portfolio from the JLR stable over the next few quarters. And therefore, I think the responses that will come through, the expectations in terms of Chinese demand recovering over the next few quarters, the North American demand coming back, holds and augurs well for JLR in terms of the overall volume growth. And therefore, I think the entire picture in terms of consolidated EBIT with JLR expected to fire on all cylinders and the Indian domestic PV and CV market continuing to do well for Tata Motors, I think that really augurs well in terms of expected earnings that the company can post over the next few quarters. So yeah, I think anybody holding on should clearly hold on. Tata Motors DVR has equally done well, along with Tata Motors as well. So I think within the auto pack, obviously I think Tata Motors has done exceptionally well. Our take is auto ancillaries remain a very lucrative bet at this juncture, because the entire transition, Nickey, which is happening from the internal combustion engines to electrical mobility platforms, is going to benefit a whole host of players. We are specifically watching out for battery makers. Exide, Amara Raja should continue doing well, because I think there is no substitute in terms of the manufacturing capacities that these guys have. Entry barriers are very, very high, and expectations in terms of them accelerating their reach in terms of the lithium battery approach. The expectations in terms of balance sheets being relatively under-leveraged, even with the expansions, really augurs well. So I think auto anchs within auto anchs and battery makers can continue.
Let's talk about Paytm. It's lost in a lot of ground, right? 42% thereabouts lost in the last 2-3 odd sessions. We've seen the 20% of up or down lower circuit limit for the last 2 sessions, and today we've seen that 10% downtake coming through. Clearly, it's been below that IPO price through and through. That was a conversation that I was having with a technical guest also some time back. Something like a new age stocks, Delhivery for that instance also has reported in the profit, which was first time after a while that we've seen those numbers finally coming through on the bottom line front. What do you make out of it?
I think it was a solid show, Nickey. So very frankly, I think the kind of numbers that Delhivery posted over the past few quarters lacked confidence, specifically from an investor perspective. And therefore, investors wanted to look out for one quarter which would mark a turnaround. Maybe this is that quarter that really marks the turnaround for Delhivery. If this gets justified in the succeeding quarter as well, I think there is a fair chance or a fair estimate that one can probably put forth that Delhivery can probably go forward and show a decent set of numbers as well. When it comes to Paytm, obviously, I think a lot of news is surrounding the counter at this juncture. What probably happens in terms of any regulatory action in furtherance to what RBI has said, the promoters have obviously refuted the allegations through their press release yesterday. But I think the street probably remains confused in terms of how and in what proportion can regulatory actions be taken and mandated over the next few days, next few weeks, and therefore the reaction that you're probably seeing on the stock. So very difficult to judge now with the kind of fall that you've probably seen on what can or what cannot happen. So I think it's a wait and watch mode for Paytm. But yeah, I think some of these new age companies, case in point being Zomato as an example, have continued their path towards profitability. So I think you probably need to bet on new age companies in a very, very selective manner.
And within the basket, what do you like? Do you like Zomato, Delhivery? What do you like?
So Zomato is something that we continue to hold, Nickey, in our global portfolio. So that's a great list.
Okay. Also, it's an important week now that interim budget is behind us and no populist constraint measures have come through. A bit of positive that we could see on the fiscal deficit performance front, though it remains a bit of an aggressive target. But RBI monetary policy review, that's the next big trigger that we'd be looking at. What's your expectation out of that? How do you anticipate markets to be moving ahead and post the event?
No, so I think it should be taken very positively, because RBI has always sounded as a beacon for supporting growth. And with that expectations, nothing negative should come out of the RBI policy. Obviously, inflation seems to be under control. There have been a lot of moves on the central government side as far as supply is concerned. And more will happen in terms of supply of food grains. Some MSP price increases should also come through. And therefore, I think the supportive mechanism that RBI has been providing on all fronts, whether it's liquidity, whether it's a supporting mechanism in terms of the OMO as well, to support liquidity in that proportion as well. I think all that steps augur really well in terms of RBI action as well. And again, we're stepping after the RBI policy into the election mode as well. So I think it would be supportive in terms of how the government is probably looking at growth. There have been no freebies that have been announced in the interim budget so far. And RBI, I'm pretty sure, will help the government in terms of supporting their overall capex plans to support manufacturing and ensuring that GDP probably will accelerates at a decent pace as well. So not expecting any negative surprises from RBI in the policy.
Okay, no negative surprise, but I'd want to also chat about State Bank of India and the bunch of other banking names that have come through. SBI, there's a clearly miss that has come through in terms of the profitability and the NII performance as per the consensus estimate. That's a bit of a drag. Of course, there was a one-time impact also felt on the bottom line performance of State Bank of India. HDFC Bank also delivered some amount of disappointment. Overall, how do you compare these two? And also, what do you like within the banking space put together?
So large element, Nickey, I think the first basic presumption that we have to believe is that the large bases that all these behemoths are working with, whether it's HDFC Bank or State Bank of India. So to that extent, yes, I think the performance was less than what the market was probably expecting to be delivered, and the reaction probably is getting reflected. But I think what one must understand is that once we enter into a rate cut cycle at some point in this calendar year, maybe the second half of this calendar year or the second half of this financial year, at some point of time, I think as the rate cuts start coming through, the biggest beneficiaries are going to be banks and financial institutions, because I think the quick pass-through that probably happens in terms of the rate cuts will reflect very, very positively in terms of the NIMs and spreads. Having said that, I think the recovery that one really expects from SBI numbers, yes, slippages were a little bit on the higher side as far as quarter-on-quarter performance is concerned. You did have some concerns in terms of provisioning as well. And therefore, I think the expectation that one largely builds up is that the first half of the next financial year is a base resetting for all these large banks. And the second half should be a quarter where I think the performance should really start coming through. Again, largely underperformed most of its peers, both of them trading below pivot levels, very frankly. So within the two, I think State Bank a little bit better placed than HDFC Bank as far as numbers are concerned and expectations in terms of numbers delivery as well. So be a little bit more biased towards State Bank if I have to make a choice between State Bank and HDFC Bank.
All right, Mayuresh, point well taken, but we're just going to leave it at that. And thank you so much for taking out the time and having this conversation with us.
Thank you so much.
Also, I'd want to highlight about the IPO out there, Apeejay Surrendra Park Hotels. That's going to be one which is knocking your doors just as yet. On Feb 5th, that's the date when the hotel chain operator will offer its shares for bidding. The issue price has been set at 147,255 per share. It's a 920 odd crore offering, out of which 600 crore would be towards the fresh issue and 320 crore will be diverted towards OFS. The company has already raised in 409 crore from the anchor investors. But that's all that we have in this edition of The Trade. With this, it's a wrap and goodbye from the entire team who puts this piece together for you. Thank you so much for watching. Please do post your feedback for us in the comment section below. For rest of the updates, stay tuned into moneycontrol.com and Moneycontrol app.